Morning, traders. Welcome to the pre-market analysis that we do every single Wednesday, opening up to the public. Thanks for joining us this morning. This is Spartan speaking, by the way. I'm going to give you guys a little bit of a breakdown on what's going to happen this morning. Once I'm done speaking here, Beth's going to come on and give you a breakdown of the macro environment, any news events that happen over the course of the evening. She'll take a look at the bigger picture items, commodities, ETFs, or whatever that makes sense to be looking at for today. After that's done, I'm going to come on. We're going to be going through the names that I'm looking at that are gapping up, gapping down. We'll go through the news associated with those gap up, gap downs, as well as go through the SPY, the FANG, the VIX, Qs, and IWM from a technical perspective. Once that's done, I'll pass it over to Selpeach. He'll come on and give you a breakdown of the individual names that he's looking at today, macro environment as well, and the analyst calls that he's caught his eye for the day as well. And then we'll do a quick little recap of everything that we looked at this morning from an individual and SPY and FANG perspective, and then we'll be ready for the open. So without further ado, I'm going to go ahead, pass it back over to Beth, and I'll talk to you guys shortly. Beth, it's all yours.
Thank you very much. Good morning, good afternoon, good evening, my friends. Welcome. Pre-market here at SpartanTrading.com. This is what we do every day, but on Wednesdays we share with the rest of you. Okay, lots to talk about. I got some really big picture stuff I'm going to talk about. Let's talk about what happened overnight first in terms of the economic data. There's all kinds of stuff coming out of China. They're having sticky inflation numbers too. They desperately want to do quantitative easing. I'm not exactly sure how this plays out, but it's a big deal. I mean, obviously, we know from a commodity perspective, goods and services, things are just very, very expensive. And yet you roll that into what's going on with their zero tolerance on COVID. It's a conundrum. I'm not sure how that plays out, to be quite honest with you. There was a lot coming out in terms of OPEC, right? Talking about there's a supply issue as well, and they need to increase supply. Well, all kinds of stuff. All right, and let's add on, we did have the 30-year mortgage. It's funny because of this, I'm going to do a little bit of a deep dive on the 30-year mortgage and why I think some of this, for those of you who rolled into a fixed as opposed to an ARM, that actually gives you extra savings. But then on the other side, we'll talk about the cost of goods and services. So it's like really all over the place. We do have at 2 o'clock the FOMC minutes. Now, normally this would not be important, but the last FOMC minutes, and don't forget, we don't have the FOMC meeting until March, end of March, right? Mid of March. This may be interesting to see what they were talking about. So at 2 o'clock, you may see a little bit of choppiness, getting into that, maybe some squaring of positions. Clearly, it's all over the place, the market right now. I mean, the president spoke, and you know the drill with that, right? So here we go. PBOC is trying to find a policy that they can actually create quantitative easing, right? Mixed messages, we know that. Inflation, this is 6-month low. It's all over the place, really. Bond buying will end third quarter here. That's what the ECB is saying. China factoring drafting plans to punish Russia. You know, we got this. A lot of anger out there, a lot of uncertainty, frustration. Okay, this is the biggest deal right here. Higher interest rates, not a major worry. So what are the tenets that we're talking about here in terms of the market finding some sort of stability, right? Earnings, right? Those who beat in guide or beat higher will be rewarded. Those who do not will be punished, a la Shopify, right? We talk about buybacks, right? Divvy increases, insider buying. So these are all the things that's going to show us that there's a little bit more confidence coming in on the on the corporate side. We still need to see institutions just calm down, say, okay, find value, and then let things play out. It's been the reason why we've been so sloppy choppy is because asset managers and institutions just are getting whack-a-mole all over the place, and they just don't know what to do. I think hopefully yesterday was the beginning of something good, but we were extended on the downside anyways. Everything's reset So, I don't think the sky's falling. I think the issue is Russia right now, and if Russia kind of abates, I think the market has already priced in 6.5 rate hikes. We can go higher. That's my story, sticking to it. But it's very selective, right? The indices, forget about that, right? It's individual stocks and stocks that you have to look at. It's a technician's market. It's a stock buyer's market, individual, and that's how you cannot look at indices as a whole. I only look at it as a hedge. And we talked about that, right? Okay. So we'll see how things play out. Obviously, Roblox, Roblox meets Shopify, right? So it's earnings, more earnings, right? Okay. Republicans not happy. They're blocking all nominees. Whatever. Whatever. Okay. This is actually pretty cool. The China rolls out this digital yuan for foreigners. I like that. Remember, oil, when it pulls back, it's a BTFD. So what happened was yesterday on the pullback, I basically got out of my XLE puts. I don't have any XLE puts anymore. I am focused 5-10 years. I keep saying this. You don't want to be cute about it and say, oh, I'm going to wait for it to pull back. The pullbacks should be shallow, and they will be shallow, and we'll see how things go out. Okay, so we'll see how that plays out. Here's Baylands. All right, so let's see what NVIDIA, it was so much fun, and I'm very proud of this, that yesterday morning, pre-market, I did a huge deep dive on NVIDIA and the semis and saying, well, this was the one that we want to see. Fantastic. It worked. I'm really proud about that. Now we have to see what happens. This is strong seasonality for the semis for the next 3 to 4 months. This could be something, the beginning of something good, right, for the market. If we start to see the semis lead, which they basically were one of the leaders on the downside, right? Let's see if we can see that start to get a little bit of its jiggy going on right now. Okay, so we'll see how that plays out in about. All right. This is really quite stunning, right? The poverty increase. This is not just COVID. This also has to do with the commodity super cycle. I'm not sure how this plays out because we have so many levers and forces going on here in the United States. And we are going to talk about this. And I do want to talk about this in terms of in the US here. Okay. So if we look in terms of 1959 to 2017, now I actually have the data for where we are right now. We're at 14 point, which is actually, believe it or not, this is pretty close to historical mean in terms of poverty here in the United States, which you wouldn't think so. And it's sad to say, but yeah, it's true. And we're at 47.5 million people. But if you look here with the financial crisis, we saw this here, the recession, we saw it got sticky for multiple years. I suspect that's what we're going to see right now, is it getting sticky. It's actually going to get worse, and the result is going to be clearly, there's so much disconnect going on here because you have jobs that, employers that can't find employees, and yet we have the poverty. And this poverty right now, I'm telling you right now, so is going to be a function of, basically getting workers to where they need to be in terms of employers, as well as in terms of on the commodity side. Things are just going to be so expensive. I mean, it's, I just don't know how this plays out, because even if you look at the 1970s, okay, with a spike in inflation, I mean, the numbers, well, statistically it's the same. So it actually will get worse before it gets better, okay? All right, once again, guys, I mean, I don't understand why people don't understand, oh, we're going to be in a bear market. We are, hello, the indices are in a bear market, but, when you got the NASDAQ, right? Only 28% is up for the year. Russell 20%, S&P 500 is 32%. You've got 74% of the NASDAQ is in a bear market. Well, I shouldn't say that. It's a 10% drawdown from the year-to-date high. I have to be specific with that. Okay. Russell, 84%. Even the S&P is 65%. 20% down from the 50. I mean, seriously, this is what's so fascinating, right? I mean, because don't forget we have energy, right? And some, weighted in some of the, like the S&P and stuff. I don't know. I find it fascinating. You wouldn't think this, right? Anyways, let's see what Eunice is up to. Analysts believe cooling inflation could provide room for the central bank to ease. They have to do, they need quantitative easing. No question about it. Okay. Hong Kong, Chi, COVID. I mean, okay. This is why you cannot let your guard down on some the miners, refiners are in the position to do crazy ass buybacks, right? They've got the balance sheets. They got the money on the balance sheets. They're going to spend it just like other companies do, right? Buying back, yada, 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 right? What are they going to do? More drilling and more, anyways, mining. Okay. Here we have the fear and greed index, notable, right? Isn't this crazy that we haven't even gotten close to where we were, right? At last month's low, which is notable. This is bullish, right? I think it's bullish, right? I mean, even though we had certain tickers like PayPal et al., Microsoft continue to go down, it's just not making, some of the stuff is just not making sense. Okay. This is actually pretty weird stuff, guys. We have both bonds and stocks selling off. Okay. Granted, this is a very short-term window, right? This goes actually back to the 1970s, which is actually super cool. So if you look back to, when we had the peak with the 1980s, that 1980, you can see here, minimum drawdown from 52-week high between stock and bond total returns. Okay, here we are here, right? It actually was worse, believe it or not, here with COVID, right? And then we have some, financial crisis. And then we have, this was the Asian crisis, right? And then we have the 1980s, right? And then look at what happens when you go back to 1979. Okay, what is the S&P TR after Bloomberg and the BR? It's bullish, actually, right? Trend reversal, right? Okay, bond trend reversal. Okay, well, there you go, bullish, right? So a lot of this stuff of opportunities that basically happen, it's very rare. Going back to 1970, so this is 136. This is the 7th time this has happened. Okay, so I'm just saying. All right, let's take a peek here. You got to keep an eye on these buyback announcements, right? They downgraded it, but they said, okay, whatever, we're going to buy back some more stocks. This is really important. We'll pull all these these stock buybacks are important. It stabilizes, right? You're talking $4 billion here on Twitter, right? That's a lot of money, right? Western Union. So you got to keep an eye on this DuPont, right? This is so important to give a floor to some of these names, right? So Edward Denny, I like to do, you should read his blog. It's very amusing. I mean, the guys, we're of the same generation and, stock buybacks and divvies. I mean, I still think this is going to be so important for this market to actually get calm about it. Okay. Other thing I talk about, right, is insider buying. This is so important as well. So this is multiple buys. You can see the companies, right? Asan had this, but that was obviously from November 12th, transaction dates to February 11th, right? So we got to keep looking at this to see where money's flowing, what people, and this is really something you have to keep an eye on as well, right? Corporate insider buy sell, starting to pick up again. It had cratered, right down here. This was in September. It's starting to bounce now. Had a peak here, right, and then it came back down. This is, I just can't impress upon you enough the importance of this stuff. So here's the AI. This is Uzis and Measies, individual investors, right? So we're starting to get a little bit more confident. You can see here we're bouncing here, the bulls, starting to get, okay, I can buy down here. So this was the low that we saw last month. surprisingly enough, right? Here's corporate insider buys, NASDAQ. This is actually really interesting. Where we are right now, this is February 2022. So I didn't actually realize that it was this high. Okay, I thought it would be a little bit lower. So I think that's actually kind of interesting. Now this is the financials inside of velocity buying. So they're saying, nah. So this is as of November. You can see that they have not been buying, which is, it really is important to get this thing going. I would love to see this, and it is kind of making a higher low to see if we can get some on the financial side, right? Here's the energy. They don't want anything to do with it, which is really interesting as we continue to make higher highs, right? No, it's not there. So this is a huge divergence, right? Because normally, well, I guess not because of the highs. They don't, anyways. I think they're wrong. And I think they're going to find out they're wrong real soon, right? Here's the rankings, utilities, and this consumer staples on the down low. Metals, mining. You know, Southbridge and I were talking about this. So how do you make money in this pot thing? I guess you have to just buy and hold it. I haven't been successful, to be honest with you, on the option side. So maybe there's something to that. Okay. All right. So here's oil services, clean energy, yada, yada. Keep an eye, Spon was mentioning this as well. Keep an eye on the solar names. I think we're going to get a really nice bounce on that one. I'm in tan. Basically, I wrote against it some of my options, so I'm going to cover those probably. Energy, you can see right here, and then you can see on the volatility on the upside, right? So which is really crazy, right? Because money flows, right, coming out of energy and oil, I guess, and then going into semis. This is yesterday, obviously, right? Euro dollar, and then you can see going into 30-year. We are going to do a little bit of a deep dive on the 30-year mortgages, okay, as well, and explain to you what's going on there and why it's actually a tailwind for the market, right? Sectors ranked oversold, utilities, yada, yada, energy. Colombia, Nigeria, Norway, Pakistan. Top dog is Malaysia. I love it. God bless Peru. Right? Brazil, all of these over here, it's looking better, right? Because of obviously the with the Omicron waning, right? Hogs, coffee, soybeans, really crazy, right? All right, so let's take. Oops, sorry about that. I missed one here. So here's our heat map, right? It's a good heat map. Yesterday was a tailwind. Today's kind of meh, a little bit of a headwind, right? But I mean, we know the drill here. Once again, will not take much for this to reset to neutral. We still have it relatively high. XME, this is something I've shouted out before. I'm not in XME, and I'm kind of kicking myself on that one, but anyways. Here the market breadth is neutral, bullish-ish. I mean, obviously we had all kinds of green, we don't have any more. Energy has been rosy red for months, and that's why Keynesian 101, you don't want to pick tops in the market. You will become insolvent. Okay, fund flows out of IWM yesterday into SPY and QQQ. Now, I mean, this is underwhelming for me, to be honest with you, but okay. All right, so, you know, once again, we got to look at who's been naughty, who's been nice. I mean, TTD, nice. They even raised guidance. Like I say, Shopify is officially in the penalty box, a la PayPal. I'll be in puts on Shopify, unless we see some sort of, you know, reversal on it. But, you know, thank God my longer dated stuff is like got a delta 0.01, so I don't have to worry about it. But still, really disappointing. Okay, and I, you know, this is something that I like. Shopify, Wix also. I mean, okay. All right. So what are our peeps saying today? We don't have a lot of only one SEVA, CEVA. Okay, fine, upgraded. 72% success rate from Rosenblatt. Right? Airbnb got a downgrade from Goldman Sachs. Not happy about that one. No. And it's higher. You know, whatever. It had earnings and you downgraded it. Fine. Get in the way of that. Yesterday, nice. God, was this nice to see. Whew. Everybody was up except energy, right? And utilities, which is fine by me. It was very nice. It was very relaxing, easy. It's not as though you had to look over your shoulder, right? Still. So instead of double digits, with single digits in the consumer discretionary, right? Services. Got a long way to go, my friends. All right, so what happened yesterday, this was really important as well. We actually saw really robust stock volume. We have not seen above average, it's been months actually. So NVIDIA into earnings, right? But if you notice, we're still sticky on the option side. The only one would be space. Look at that, 180 million shares, guys. Average is 16 million, 10 times rotation. There you go. Micron also had some fun stuff going on. AMD, it was the world of the semis yesterday. Also space. This was really fun. I mean, I shouted this out really early. You saw the retail. They were doing it, pounding it all day long. All right, here's our hype. This is what social media is talking about. NVIDIA, obviously earnings this afternoon. AMAT has earnings this afternoon as well. It gets a hype score of 6. Airbnb 5, GME 5, QSR 5, Roblox 5 on the downside, and Tesla, as well as UPST. That UPST is nice. I'm going to get paid on my options on that calls. They were worthless yesterday. Today they have some premium coming into them. It was so far out of the money, not anymore. All right, so let's see what happened yesterday. Oh my God, how long has it been since we see 70+% on the call sweep side? This also has been a while. So we're going to start it just one day at a time. And what I really liked about it, was there's all kinds of stuff all over the place. It wasn't just, one or two things, all right? So we had a lot of things going on. But on the downside, it wasn't really kick-ass, right? But NVIDIA had 12 prints. A lot of this was retail yesterday, right? AMD retail yesterday, this was sweeps coming in, right? But not a lot. I mean, normally this would be like 30, 40. And NVIDIA would be 20, 30. So Apple would be the same thing, but God bless, it's the first time we've seen anything like this in a while. Whew, right? Joby, I shouted this out multiple times. I'm in this one. I mean, it was a really nice kick-ass trade. They were printing, the Joby and Space were the two that they were going after all day on the retail side. Bonds, yields are down, steep, and it's still flattening, inverting. It's okay. I keep saying this. It's okay. Things will stabilize once the Fed gets off its ass and does something, right? So the question is going to be, I think the market actually, to be honest with you, would be really, really happy if they did a 50 basis point hike on the Fed funds, to be honest with you. My time is up, but I'm going to continue to prattle on, right? Let's get some stuff here. Okay, mortgage memory lane. This is a great article. There's a few of these that came out, basically going back to World War II. 1948, creation of the 30-year mortgage, and a lot of that had to do with the VA. The creation, prior to that, it was very few people bought homes. It was always the wealthy, and then it became distribution for trickle down into usies and measies, the average Joe, as they say. So a lot of this was a big deal. So I want you to see the rates are below the 1950s. Okay, and it took me a while. I had to find this, but this is going back. So you can see here that this was the financial crisis, right? And it came back, and then we got really, really low. This is wealth building in the sense that if you can do a 30-year mortgage, the average is probably, I'd say, 5%, 5.5%. I remember my father was so excited when in the 1960s, he was able to get a 30-year at around 5%. He thought that was like fantastic, right? So you have to understand in terms of eventually the quantitative easing we saw becomes a huge tailwind in terms of disposable income, right? Because if you look here, the ability to roll that from an ARM into a fixed rate 30 years out, it's not right now, but this is going to be a huge tailwind eventually, okay, for this market, with the disposable income that's being created as a result of that. All right, so here, see, right, this only goes back to, 1970s, but the mean is probably 5%, 5.5%, maybe 6%, right? So you can see where we are, how we got down here to 2.5% on the 30-year. people who own a home, if you didn't basically refi at 2.5% a year, okay, I have to have a serious talk with you. Hey, look, I'm not licensed or anything like that, but this is just, this is not rocket science right now, right? Now, the other thing that's really fascinating is this delinquency, and I wanted to show this to you as well. And the reason why this is important is because the requirements to buy is a lot less stringent than they were back here. So this is part of what you get when you allow more and more people access to, mortgage rates in a home. You get more delinquency. That's to be expected. But irregardless, you cannot underestimate the importance on the mortgage side that this will have in the economy going forward. It's not, you're not going to see it right now because of all the crazy stuff going on. We're talking probably 5-10 years out. Right? Here's the 5-year. Once again, it still got rebuffed at the 61.8% Fed, right? Nothing's going to happen here until the FOMC, I don't think. And then we're going to basically get into from the 61 up to here, probably this new quadrant. I don't have any problem with it. Like I keep saying, this is not a bad thing, right? And you can see also here, the 2 and the 5, how that basically the 5-year, in terms of the inversion, the 2-year caught up. Look at how this really kicked ass against the 5-year, right? So this is actually pretty interesting. And you can see if you go back here, which basically just going back to, the mean, right? So here's the 5-10, still rebuffed at the 78.6%. Okay, this is actually more interesting for me. Don't forget that the 5 is a taper sweet spot, okay? So once again, I would not be surprised if we now get into this. This is gonna be the quadrant right here. So you can see it right up here. So where we're gonna go, right? So that's basically just getting back to where we were eventually. Now, granted, this is accelerated, right? And then we have the 2008 financial crisis. So this is really getting back to, historical. The historical average, I would probably say, well, this is the upper quadrant. So this is something we do have to look at, right? Here's a 530, double top, triple top, still holding place. I don't think it will. I think we're going to get the next leg up here, and that's going to be up to here. So that would be also make sense to me as well, right? If you go back to a couple of years back before the COVID, right? So here we have the 10-year. It's starting to break out. Next leg upcoming. We probably are going to get up to this quadrant right here, and I think you can see it. So this is where we're going to go, right? So probably up to this 2.5%, right? It's going to be slow, but it's going to get there. Because if you look at it, we're all the way up to 3.25%. So just grinding higher. All right, once again, China, they need to lower interest rates. It's a conundrum. They can't do it right now. They're going to have to find ways to do it. Their economy is not doing well. They're going to have to do quantitative easing. We know what's going on in Germany. This is absolutely stunning. Stunning. I mean, this is epic, to be honest with you, the way in which the speed in which this is going. But if you look on a percentage, this is actually greater than, but in terms of numbers, this month has been absolutely amazing. All right. So here we have the dollar. Yeah.
All right, Beth, I'm ready to pop on here.
All right, my friends, enjoy. Welcome once again.
All right, guys, morning. What's going on? Let me just pop up the screen share here. So let's take a look at what we got going on today. If you guys are new to chat and haven't already done so, make sure to click that Discord link that's emailed to you. When you guys do come into chat, click on that disclaimer section, then click on the new to chat information section at the very top and read that from top down. We'll go over that in a little bit once we close down the YouTube stream. Pre-market tickers on watch. What do we got going on today, guys? A couple different things. Tesla Shop, Gnrc, Airbnb, UPST, Rblx. So Tesla gapping in sympathy with the market. Shop earnings miss, EPS and rev beat. Gnrc earnings beat, EPS and revs. Year-over-year growth 40.2%. 2022 guidance raised, stocks gapping up. Airbnb earnings beat, EPS and revs. Year-over-year growth 78.3%. Q1 guidance raised, stock is gapping up. UPST earnings beat, EPS and revs. Year-over-year growth 251%. Q1 guidance also raised there, stocks gapping up. And then lastly, we have Rblx, which had a earnings miss, EPS and revs. And obviously the stock is gapping down because of that. Let's take a look at what we got going on today from a technical standpoint. So we'll take a look at these names. Tesla and Shop, first two. So Tesla and Shop. So Tesla, pretty much a slight gap down with the SPY here. Not much, but I do like the name and I want to keep an eye on it today. So that's why it's on the board. 926.39, guys, gonna be the pivot to the upside today. I'm gonna just quickly just show you the daily. So reclaim short-term EMA support, a little bit of a downtrend or range test that's set up to the upside for a bear flag reversal. We'll see what happens today in regards to getting to that area. Does look as having a little bit more of a bullish look to it on the daily here. I do like the look. So 926.39 pivot level holds. There's reclaim towards 952.55 to 980.68. Unable to hold 886.73 to 858.04 will be tested on the downside. Overall on Tesla leaning bullish neutral, looking for a continuation push higher if that pivot point can hold. So that is Tesla. Let's take a look at Shop. So Shop, guys, gapping down a little bit here. On the earnings, of course, we're into the bottom end of the range, recent range, I believe. Yes, Shop's at 832s, 840s. Let's get this level of support here. All right, that should be good. Let's take a look at this thing intraday now. There we go. All right, 840.03 pivot to the downside today. This level is able to be reclaimed. We got room back towards the 880.38 to 925.57. Unable to hold 807.83 to the 779.77 level on the downside will be tested. Overall on Shop, going to be leaning on the bearish side today, looking for continuation lower if that pivot point is unable to hold. So if it's unable to hold, it's got room to the downside there. That is Tesla. That is Shop. Let's take a screenshot of this. Let's move on to the next. So Gnrc and Airbnb. All right, Gnrc, let's take a look at this. So stock is gapping up, 299 a share, okay. Basically to this top recent range high. Breaks 50 MA, 23, probably have to come in a little bit. Well, looks like it should be okay. Get that pivot point there. Should be okay. All right, let's take a look at this thing intraday here. Let's get that resistance. All right, so 289.94 pivot to the upside today. Levels able to hold. We got room towards that 299 level to 308.45. Unable to hold. 281.93, 268.02 on the downside. Overall on Gnrc at the moment going to be leaning bullish. Looking for a slight pullback out the gate and then a curl and a continuation push to the upside. That's what I'm looking for there. All right, let's take a look at Airbnb here. So stock's gapping up on earnings there. It had a pretty good run into earnings, which is why I'm going to be saying I think we can get profit taking on this gate. We'll see though, of course. EMA support. Range support. Start getting to like quite a big gap to the upside here. Okay, let's take a look at this thing on the intraday chart. Yeah. 187.51 pivot to the upside today. This all was able to hold. We have room towards the 194.80 to that 197.50 level on the upside. Unable to hold, we look for a pullback towards 180.83 to 177.42 level. That level breaks, 177.63 will be tested. Overall on Airbnb, I'm actually leaning a little bit more on the bearish neutral side today. I do think we can see a little bit of profit taking out the gate. And then we can look for a curl this afternoon. Kind of reminds me of the Disney chart into earnings, guys. Bought up a little bit. Earnings came out pretty much sold back, filled the gap. We'll see. We'll see. All right. So that is Gnrc. That is our Airbnb. All right. Next two guys, let's take a look at UPST and Rblx. All right, UPST, nice little move in the after hours yesterday. Pretty much stayed pretty much flat in the pre-market, but that's great. I think this is a squeeze kind of set up to the upside at the moment. Pivot to the upside, 133.03 level holds, 147.90 to 164.82 will be tested. Unable to hold, 121 to 106 on the downside. Overall on UPST leaning bullish, looking for a continuation push higher today. So that's UPST. Let's take a look at Rblx. Okay. So Rblx pivot to the downside today, 63.18. This level is unable to hold. 59.88 to the 56.66 level will be tested. Able to hold or review reclaim. Look for a pushback to 66.01 to 70.03 on the upside. Overall on Rblx, going to be leaning bearish. Looking for continuation lower if that pivot point is unable to hold. So that is UPST. That is Rblx. All right, let's take a look at the spine of the FANG. Let's see what's going on there. So market. Let's link this to the daily chart as we do. All righty. Now let's have a look. All right, there we go. So what's going on here? So basically SPY trying to push back into short-term EMA support, did reclaim and fill the gap after the extension yesterday. So now it's a matter of getting above short-term EMA support, which is going to be around that 447. This all lines up, which is great. 447.50 level. That's going to be your pivot to the upside today. Let's label that. And if we can reclaim that level, then the 50 EMA would be the next major resistance to the upside. So it's all going to be about this pivot today. Let's get some levels here. There we go. So SPY pivot on the upside today is going to be that 447.55 level. Level's able to be reclaimed towards 450.82. That level breaks. We can see further continuation towards 453.78, which is that 50 EMA on the upside. Unable to hold 444.74 to 441.22 will be tested on the downside. That level breaks. 438 will be the next support. Overall on the SPY at the moment, going to be leaning bullish, looking for a continuation push higher if that pivot point can be held. So we'll see what happens. That reclaims. We got some room for continuation. Unable to do so, well, probably will be a little bit of a fade back today. All right, so that's the SPY. Let's take a look at the FANG here. So let's take a look at Apple first and foremost. All right, so Apple, we got a little bit of a flag on the daily to the upside here. Pivot to the upside today is going to be that 171.93 level. This level is able to hold. We got room for continuation towards 174. That level breaks 176.68, 176.88 will be tested on the upside. Unable to hold, look for a pullback towards 170.24 to 168.29 on the downside. Overall on Apple, going to be leaning bullish, neutral, looking for a continuation push higher today. So we've got to reclaim that pivot. If you do, we got to see, we can see that continuation to the upside. That's Apple. Let's take a look at Amazon. So Amazon, a little bit of a flag setting up in the short term to the upside. It's been doing quite a decent job of holding its recent range. Weird that it's labeled off. Oh, that's the previous day. That makes sense. Okay. That's fine. Pivot on the upside today on Amazon is going to be 31.31. Levels unable to hold. You got room back towards 30.58 to the 29.94. Able to hold. We look for a push back towards 31.69, 32.31, 32.81. Levels on the upside. Overall on Amazon, leaning bullish, looking for a continuation push back towards that 50 MA in the short term, which is going to be around 3. I'm actually going to change this level to that 50 MA, 3185, which is going to be 3185 on the upside. So I think that's the magnet in the short term today, and then we'll see what's what essentially once it breaks or tests that level to the upside. So that is Amazon. Let's take a look at Netflix. So Netflix trying to curl off the lows, clearly on the daily chart. It's starting to look better, I guess, in the short term. Let's use that pre-market high level. Pivot to the upside, 406.78. Levels able to hold for 16.72 to that 429.30 level will be tested. Unable to hold 395.22, 377.62 on the downside. Overall on Netflix, going to be leaning bullish, neutral, looking for a continuation push higher today. Let's take a look at Facebook. And I know the next level is at 207s. All right. 214.69 pivot to the downside today. Levels unable to hold. We're towards 207.90. That level's able to hold. We got room back towards 221 on the upside. At the moment, overall, going to be leaning bearish, looking for a continuation lower if that pivot point's unable to hold. Just seems like this thing is bearish consolidating every day, and it's got more room to the downside. Not really any buyers in it. Tons of weakness still. Let's see what happens. I think that 207 needs to be tested. I've talked about that a few times. But yeah, I think it really does. All right, let's take a look at Google. Well, Google basically trying to push back to retest the 50 EMA here. Head and shoulders, inverted head and shoulders, I guess I should say on the daily. Did hold. We got a nice bounce off it the last couple of days. Pivot to the upside today is going to be this level right here. 27.59, that level is able to hold. 28.14 to the 28.62 level will be tested. Unable to hold 27.07 to 26.64 on the downside. Overall on Google, going to be leaning on the bullish neutral side today if that pivot point is able to hold. So that would be the key level there. So that is Google. Let's take a look at IWM. Sorry, IWM. Let's take a look at the VIX Qs and IWM. First up and foremost, we'll take a look at the VIX. So what's going on with the VIX? Pull back to short-term EMA support on the daily. And typically it's done a pretty good job of continuing to sell off towards the 50 EMA. It doesn't typically hold that short-term EMA support, looks like. Yeah, in most instances, it doesn't bounce off of it and actually breaks. All right. 24.87 pivot to the downside today. This level is unable to hold. Room towards 23.49 at 22.46. Level breaks 21.23 will be tested. Able to hold 26.03, 27.24, 28.85, and 30.01. Levels on the upside. Not leaning any particular direction, but using the VIX for direction on the market as I typically do. That pivot point will be important. It is technically an EMA support on the daily, so you have to keep an eye on that for sure. That is the VIX. Let's take a screenshot of that and let's move on to the next. QQQs. All right, 355.24 guys, pivot to the downside today. On the Qs, this level is unable to hold. Room towards 350.46 to 346.41. Able to hold 358.54 to 362.51 will be tested on the upside. Going to be leaning a little bit on the bearish neutral side of the Qs today. I think you might get a divergence between that and SPYs, or the S&P 500, I should say. So we'll see what happens there. Watch the pivot point. Obviously, that's going to be an important level of support. That's the Qs. And lastly, let's take a look at IWM here. So 206.45 pivot to the upside today on IWM. Levels able to be reclaimed. We got room back towards the 209 level. Unable to hold 204.79, 203.01. Going to be leaning bullish on IWM. It's a bear flag reversal setup. It did confirm yesterday that that's what's occurring. Now it's just a matter of getting back above this 206.45 level for continuation. It's back above that. We should see a continued push to the upside. So it's a pretty decent looking setup. And really quickly, guys, on that tizzy swing that we're in, I'll give you the next resistance level. I think we had 162s. Next resistance will be the gap fill area 178 above that. Pretty good trade so far. Almost 100% on it. Just needs to go 20 more cents. Anywho, that's the SPY. That's the FANG. Those are the individual names that we're looking at today, guys. I'm going to go ahead and pass it over to Southleach while I type up that pre-market action plan. Then we'll come back on. We'll do a quick little recap before the open. And once we do close down that YouTube stream, I will go through the new to chat information section with all the guys that are new into the room today. Anywho, that's it, guys. Southleach, if you're ready, it's all yours. And I'll talk to you guys shortly.
Hey guys, okay, Wednesday. Let's see what we're looking at today. Bond market's ticking down a little bit, probably because of this Russia stuff. Market's getting hit on that. All right, we'll talk about that. We'll circle back to that. 201 is the last sale in the 10-year, and that's down 0.028. 5-year down about the same, and the spread is 10 basis points. Okay, that's what we got. And over in Europe, bonds are down a bunch there as well. This a little more, down 0.05 in London, 152, top of the range. I think they hit a new high yesterday, so that's gone. Their rates have more than doubled this year, or about doubled. Okay, and their spread is a little wide. Let's see. Hold on. I think their spread's about the same as ours. A little less, actually, 0.8. Okay, let's see what's going on in Germany. So they're down 0.046, et cetera, et cetera. So we have lower bond yields, basically spreads staying pretty flattish. Europe saying basically they're going to keep the punch bowl around longer than us. They don't think they're in the same shape as us. Prices haven't gone crazy like us, and inflation is below 2% over there. I don't know how they're pulling that off, but that's what they're saying. Okay, so that's that. Excuse me. Let's look at commodity prices. Oil is ticking up. Comment from OPEC today saying basically, where is it? Basically, in a nutshell, there's nothing we could do about high oil prices. Okay, it is what it is. That's the gist of it. Okay, I can't find where I wrote it, but that was really it in a nutshell. Okay. And we have no energy policy here in the US, so we can't make it better, and it's too late to change it. So that's how it goes. Okay, we're stuck with it for now. Okay, so that's commodity prices. Let's look at Copper is unchanged. That's been in a tight trading range. Agricultural commodities refuse to give up any of their gains. And so inflation stays high, yada, yada. Okay. Dollar down against North America, down against the yen, flat against China, but at really low levels. And the euro's hanging out, not doing much, 113. Crypto ticking down with high PE tech. That's what it's been doing lately. So it's down 500 points, which is 1.2% on Bitcoin. Ethereum is down about the same. And Solana is down 2.6% at 99 bucks. Okay, and let's see the foreign markets. We got the FTSE down 20, the DAX down 16. My guess is that this is delayed because it should be down a little more. Let me see what Bloomberg says, just out of curiosity. Yeah, it's about the same. My guess is they're getting hit now a little bit. It'll refresh in a minute. And that's that. Let's see what the Russian market is doing. Russia is up 1%. Over in Asia, we got the Nikkei up 2%. We got the China up fractionally, and Hong Kong is up 1.5%. So that's the backdrop. Okay, did I miss anything? I don't think so. Okay, so that's that. So we have the banks and the Fed. Okay, nothing really there. I think they're releasing the minutes today. Am I right there, guys? Is it today? That might provide something. Somebody will tell me. Okay.
Yeah, it's at 2 o'clock.
Thanks. Appreciate it. Okay, so then we have China. Nothing really new out of China that I could see. Russia. Okay, so there we have something. Okay, NATO officials are saying that Russia is actually building up forces, and Blinken just came out and said more or less the same. Okay, let me just look at his verbiage here. If I can read it. Did you see critical Russian units moving towards the border, not away? Okay, so that's what we have with that. Okay, crypto is crypto. Oil we discussed. I think the OPEC guy says it all, and a lack of any kind of energy policy in the U.S., which is really, really a joke. And I'm not blaming it on this administration. I'm blaming it on all the administrations that have led up to this, and plus this one is inept. So you have a combination of lack of leadership on the oil front for sure. Okay, the virus, Moderna CEO, we're in the final stages of the pandemic in the US. That's what he's saying. Dollar is the dollar. We discussed it, Mr. Market, yesterday. So in the market yesterday, what the semiconductors were really, really hot. Okay, we continue to see a lack of continuity overnight from trades. You know, it's just like no rhyme or reason. Okay. Yesterday, the bad group was Big Oil and E&P. Today, they're up. The best group on the long side was semis. Today, they're all down. High PE tech was good yesterday. They're down. EV, solar, both down. China, down. Okay, so anything that was up is down. Anything down is up. You know, good luck with carrying positions overnight because of momentum. It ain't working. Okay, maybe these little ones, yes, they work. Anything that's market driven doesn't work. Okay, what do I think the big news of the day today is, other than the Russia situation, which is also important? Google new privacy restrictions like Apple. Now we see what happened to Facebook the last time. We saw what happened to Twitter and Snap. We're going to see more of that, guys. Okay, if these privacy things go through, ad dollars go down for these guys. They're swimming upstream. Very difficult situation for these guys. Okay, so I think that's really big news. I saw a guy from the restaurant industry on TV a minute ago, earlier today. Employment costs are up. Food costs have gone up faster than he's ever seen. What does that mean? Margin erosion. Okay, so we're seeing that in everything. All right, right across the board, inflation is taking its toll on a lot of companies. And unless that company has pricing power, they're really screwed. Okay, and then you have allocation of dollars. All right, you're an average guy making average wages with 2.5 children and a dog, and you live hand to mouth, and your energy prices are through the roof. if you have a variable rate mortgage, it's going up and stuff like that, and you're being squeezed. And so your disposable income goes down. And, you know, you have companies showing it, you know, like this Lazy Boy is a perfect example, missing earnings, okay? Why? Because people are saying, screw that, I'm not spending on the house. I got to worry about eating and heating and keeping warm. So I think that's the situation we're faced with right now. And unless you're like, you know, a Proctor where people are going to buy Tide no matter what, it's going to provide issues, okay? Or you have a commodity that people just can't live without, like these semiconductor companies, okay? So you have to look at it in that context. I mean, as far as Russia and Ukraine are concerned, truthfully, I don't think it affects any of our companies, but, you know, it's disconcerting nonetheless, and it could lead to something bigger than it is, and therein lies the problem, okay? So you have a lot of stuff that's kind of negative for the market, okay, this morning. So import prices up 2% versus expectations of 1.3. Export prices up 2.9% versus expectations of 0.7. Continuing the inflation drum just doesn't seem to want to let up yet. As far as numbers are concerned, we had good numbers from Analog Devices, Cowen, Crocs, Generac, KHC, letter R, which is Ryder, Sonic Automotive, Vulcan, Airbnb had good numbers. Upstart, we know, had good numbers. The Trade Desk, Crocs, GXO, Sonic, I said already. What else? Devon Energy, you'd think the energy companies will have good numbers because why? Their margins go up, they're not drilling much, and every buck that goes up, they make a little more, right? And we build no pipelines, we do nothing, and yada, yada. KHC had good numbers too. Those are the kind of companies you would expect to do well. They have pricing power, right? What else? Google, new privacy rules. That is a big thing, guys, because we saw what happened with Apple. So don't lose sight of that. This is not a single day situation. This is going to be ongoing for the next quarter or two when they implement it, and they're having trouble with the Apple situation as well. So you saw Facebook, he blamed it mostly on on Apple. So who knows what's going to happen there? I think that's significant. And these stocks, excuse me one second, these stocks have a big implication on the S&P. Their weightings are really high. And so, you know, the two big dogs, you got Apple and Google, both, you know, basically turning the screws. So we'll see. Okay. What else? Okay, negative numbers, we had this FUN, and they also rejected SEAS's bid. We have Akamai missed, Denny's, CRL, Garmin, Hilton, Shop, revenue growth situation problem there. TTD, Wingstop, I'm surprised they missed. I guess their costs are up too. Wix, Roblox is a surprise. I had a I had a what, 80, 90, 100 butterfly I put on for 80 cents. Yeah. You just don't know. Okay, that's why you do butterflies, guy. I know what my risk was, 80 cents. Okay, it's gone. I didn't lose. What the hell is this thing down? 16 bucks. Viacom, another company shit in the bed this morning. That industry is getting pretty tough. This Toast, I see their machines everywhere and they can't make money. What does that tell you? MAS and Lazy Boy, which I mentioned. Angie was bad. Win, they're doing everything but pull out the kitchen sink, sales, leasebacks, and what have you. They missed a little bit too. SEDG, surprise there. Garmin, Sage, and MRTX, both are down with negative biotech news there. Anything on the plus side? The CRSR is added to the S&P. That's about it. Okay. Like I said, there's two knives hanging over the market now, Russia and this Google thing that I see. Okay, so that's that. What else? All right, I said I would talk about, you know, different guys and what they're saying, interviews and so on and so forth. So today we're going to look at Jeremy Grantham, who, to give you some background, he's an older guy. When guys get older, they tend to turn more bearish, just the way it is. But this guy is rarely bullish. You know, the market has to set up like a Graham and Dodd setup for him to get excited, but he's really, really bearish. Okay. And so what he's basically saying is that we're in a super bubble, which is a three sigma derivation from the norm. Okay. And he said 2 sigma happens every 35 years. This happens, 3 sigma is every 100 years. So like when I say bearish, I'm saying, you know, flames coming from his head bearish. Okay. The US is the epicenter of the bubble, and there's nothing the Fed can do about it. We will decline a lot more than people expect and a lot more than everyone else. Okay. By global value stocks, avoid the USA. US stocks are significantly overpriced. He's short the IWM about half as much as he is short the NASDAQ. He thinks we get back to 2000 levels. Okay, now keep something in mind, guys. This guy is always bearish. Okay, he is like at the extreme, but you want to hear everybody's viewpoint, right? I mean, you can't just listen to the bulls. You can't just listen to the bears. You take it all in and you see what's what. Okay, so we're going to get a super bubble burst. US housing prices will get hit. They're overpriced as well. And you can see his interview on YouTube if you want, okay? But you might want to take a antacid before you listen to it, okay? Early stages of the debacle, he's saying, okay? So, like I said, he's always bearish, so take it with a grain of salt. But this is what he's saying, okay? Let's see if there's any research worthwhile here. Generally, no. These guys are the worst. But that being said, Viacom was downgraded by Bank of America. They think a potential sale is not imminent. They take the target from 53 to 39, and the stock's getting hit there. You got to buy this name on weakness. I don't know about today. I usually wait to have a 3-day rule. I am currently not in the name. I don't want to be in names and earnings, especially when it's not a long-term situation for me. CarMax and JWin were downgraded by Evercore. That's really it on the short side. Oh, Tesla reiterates sell Tony, I'm never right, Sakinagi, target 300. Upstart, reiterate the outperform, reduce the target to 345. Wells Fargo likes Marriott. They like STZ. But every one of these likes, guys, they're lowering targets. For instance, Deutsche Bank likes a bunch of retailers, but like TJ Maxx, target 89 to 83, Burlington 311 to 288, Kohl's 86 to 75, American Eagle 45 to 38, like that. The biggest standout in research today was this Evercore. They raised Macy's to an outperform target 50, stocks 25. The thing that gives me pause is that my old partner at Jana got out of the stock, and he is a smart dude. Okay, and if he thought he could have milked this cow for longer, he would have stayed on. And believe me, he knows this company inside and out. So I'm not a real fan of this 50 target. I think the guy's smoking something, but I tell you the way it is, and this is what he's saying. So that's that. Okay. Anything else in research? Not really. You know, I'm concerned when a guy who owns a restaurant comes on and tells you that his food costs are spiking, that employment costs, he's able to get guys, but he's got to pay up. And all these businesses are just getting squeezed, okay? And then you have the Fed trying to put a damper on the economy by, you know, both, you know, saying he's going to raise rates and, you know, verbally trying to talk things down, and he's willing to raise rates. So I think, the economy's got to slow down, and that's not particularly good news. But at the end of the day, rates are 2%. Inflation's running hotter than 2%. So you run that situation like, where's the best place for you to go, right? And you got to say, what am I going to do? And stocks at the end of the day do provide the best outlook, in my opinion, still. Okay. I mean, you can go in cash until this, maybe the market drops a little bit. I don't know. It's hard to time. But I know bonds are where you don't want to be for sure. I mean, housing prices has gone up through the freaking roof. So you don't have a whole lot of choices. So I think stocks are still the best. What is he saying? Yeah, okay. So Twins is bringing out, pass this along. You got to ask yourself the question, which reverts back to what I said earlier. Can your companies pass these higher expenses along? Some of them can, some of them can't. And you've got to, decide for yourself where your company stands in that respect. Okay. I think the consumer non-durables can pass the expenses along, whereas a lazy boy can't. It's kind of like that. All right. Kathy did almost nothing last night. The syndicate calendar is zippity doo dah. Why? Because no one's buying stuff, and the fact of the matter is, more supply will just make the market worse. Okay, it drains liquidity from the market. So they're trying not to drain liquidity from the market because things are tough enough. Nasdaq's getting hit. No surprise. Okay, like I said, this Google thing is big. I really do think that's a big thing. All right, and because we saw what happened with Apple, so it's no surprise. As far as the market setup, I think it's continually bearish. These averages didn't change anything with the rally yesterday. They still look heavy to me. I think the point of least resistance is lower. And I think the smart thing to do is go home lightish, okay? And don't bank on follow-throughs, because unless it's, the little ones have been following through, let's face it. Okay, the Cavals, the Tissies, stuff like that. But these bigger stocks, one day to the next, there's so much headline risk. You're almost better off, just going home flat and trying to get it, in sync with the market in the morning and trade away. I think that's the script currently. That's the way you're gonna be in better shape, because you want to play offense. You don't want to come in the hole. You know what I mean? And I think that's important. So I'm a little bit in the hole. I took some Hog and GoDaddy last night. I took some Tissy, so that's going to help. The Roblox is gone. It was 80 cents. I didn't do many, so I'm fine with that. That was a bet that was, not too much money there, and that's it. So let's see how it goes today. I guess we're going to have a lot of headlines coming through with Russia, and we'll see how it goes. Okay, so that's it for me. I'm out of time. I'm going to give it to Spartan, and let's make some money, guys. All yours, man.
Ready? Thank you, South Beach guys. Morning. What's going on? Let me just pop up screen shares up. Let me just do a quick little recap of what we talked about this morning. So in regards to the pre-market tickers out on watch here, everything is posted. You guys, if you're watching the YouTube stream, can simply just pause this and read it. Give that a read, give that a read, give that a read. All the charts are posted, and let's just quickly go through everything again. So, let's also show you the option side too, guys. There you go. Okay. So let's take a look at what we got going on today. Pre-market tickers on watch: Tesla, Shop, Gnrc, Airbnb, UPST, Rblx. Tesla gapping up is through the market. Shop earnings miss, EPS and rev beat. Gnrc earnings beat, EPS and revs year-over-year growth 40.2%. 2022 guidance raised, stock is gapping up. Airbnb earnings beat, EPS and revs year-over-year growth 78.3%. Q1 guidance raised, stocks gapping up. UPST earnings beat, EPS and revs year-over-year growth 251.6%. Q1 guidance raised, stocks gapping up. And then lastly, Rblx earnings miss, EPS revs, stocks obviously gapping down, and we can see the names are actually making the next leg to the downside right now at the moment. Looks like 53.65 is the next support. Oh, 53.72, I guess is what we'll call it. Anywho, let's take a look at what we got going on today. So first two we're looking at, guys, Tesla and Shop. So let's rip through these names. So Tesla, 926.39 pivot to the upside today. Level holds 952.55 to 980.68 will be tested. Unable to hold 886.73 to 858.04 on the downside. Overall on Tesla, going to be leaning bullish neutral, looking for a continuation push to the upside today. Shop pivot downside is going to be 840. That level is unable to hold. We're got room towards 807 to 779. Able to hold, look for a push back towards 880.38 to 925.57 on the upside. Overall on shop, leaning bearish, looking for a continuation lower today. Gnrc, Airbnb. 289.94 pivot. Levels able to be reclaimed, room towards 299.09 to 308.45. Unable to hold 281.93, 268.02 will be tested on the downside. Overall on GNRC, leading bullish neutral, looking for a little bit of a pullback out the gate this morning, then a push higher. I said, you know, I think Airbnb is like Disney. It's making its move a little bit quicker than I thought, though. But 187.51 pivot, level holds 194.86 to 197.50. Unable to hold 180.92 to 177.42. Like Disney, I think it fills its gap. It's already almost filled its gap. So we're looking for a you know, a little bit of a bearish move out the gate, and then a curl pop potentially this afternoon. Quick little movement there. UPST, Rblx, UPST pivot 133.03, level holds 147.73 to 167.80. Unable to hold 121.06, 106.08 on the downside. Leaning bullish neutral on UPST, looking for continuation push higher today. I like the earnings. I think it holds up well. It's got room to squeeze. Rblx pivot downside 63.18. Levels unable to hold 59.88, 56.66, 53.72. Able to be reclaimed 66.01 to 70.03 on the upside will be tested, leaning bearish on that. Let's take a look at the SPY and the FANG. Market SPY 447.55 pivot. Levels unable to hold 444.74 to 441.23 will be tested. Able to hold 450.82 to 453.78 on the upside. Overall on SPY, leaning bearish, looking for continuation lower today. Let's take a look at app. Well, I should probably take that up. So kind of a little bit of a change. I was leaning bullish, guys, but this pullback's not great. 447.55 pivot to the upside today. This level's unable to hold. Room lower into the 444.74 support. Breaks, we see the 441.23 level tested. They're able to be reclaimed, are able to hold. Room into the 450.82 resistance. So we see the 453.78. I guess I will be leaning bullish. So I'll be looking for a little bit of a curl at the gate now. So we'll see what happens. I think that last stayed low is going to be a key level right now out the gate to hold. If it is unable to do so, obviously we break the range to the downside and we'll start to fill that gap. So keep an eye on that level. We'll see what happens there. That's SPY. Let's take a look at Apple. Pivot to the upside today on Apple, guys. 171.93 levels able to hold. 174.01 to 176.88 will be tested. Unable to hold 170.24 to 168.29 on the downside. Overall on Apple, leaning bullish neutral. Looking for a continuation push higher if that pivot point can hold. Amazon pivot today is going to be the 31.31 level. Levels able to hold 31.85 to 32.31 will be tested. Unable to hold 30.58 to 29.94 on the downside. Overall on Amazon, going to be leaning bullish neutral, looking for a push back towards that 50 MA on the daily. Netflix pivot upside is going to be the 406 level. Levels able to be reclaimed, room towards 416 to 430s. Unable to hold 395 to 377.62 on the downside. Leaning bullish neutral only if that pivot can be reclaimed. I think it can grind higher if it's reclaimed. Facebook 214.69 pivot, levels unable to hold 207.90, able to be reclaimed 220.33, 221.33. Overall on Facebook, leaning bearish, looking for continuation lower. Google pivot downside today, or upside, I should say. 27.59 levels able to be reclaimed, moving towards 28.14 to 28.62. Unable to hold, we look for a pullback into the 27.07 to the 26.64 on the downside. Any bullish neutral on Google as well. Let's take a look at the SPY, the FANG, Qs, IWM, all that stuff. So SPY, what am I saying? We just did that. Let's take a look at the VIX, Qs, and IWM. VIX, so we have that level, the pivot holding right now, 2487. Able to hold 2603, 2724, 2885, unable to hold 2349 to 2246. Watching the pivot this morning for direction on the market, seems to be holding. Market will come in as long as that holds. QQQs, pivot to the downside today, 355.24, levels able to hold. Room to 358.54 to 362.51, unable to hold 350.46 to 346.41 on the downside will be tested. Overall on the QQQ, going to be leaning on the bullish neutral side today if that pivot point's able to hold. So that is the Qs. And then last but not least, guys, sorry, leaning bearish neutral on that. An IWM leaning bullish neutral, this name 206.45 pivot levels able to be reclaimed, room towards 209, unable to hold 204.79 to 203 on the downside will be tested. Overall, like I said, leaning bullish neutral. So that's a SPY, that's a FANG. Those are the individual names that we're looking at today, guys. If you're just joining us on the YouTube stream today, thanks for watching. Or if you just came in today, thanks for watching. We do these every single Wednesday. And